Hey, everybody, welcome back to today's Market Explain, the FourStar podcast. I'm your host, Brian Castle, and I'm here with a new guest host today who's joining us, a FourStar advisor. His name is Ken Roberts, and he's joining us from his location in Truckee, California. Ken,
Yeah.
well, welcome to our podcast today.
Thanks, Brian. It's great to be here.
Great.
Looking forward to it.
So we had a great, interesting election this past week, and a lot of implications. And Ken, now you run Ken's Bulls and Bears out in the Reno Tahoe market.
Right.
So tell us a little bit about your show first.
I do a radio show. I do it weekly. It's every Friday, Pacific time from 10 o'clock to 11 o'clock. And in this area, you can hear it on 93.7 FM and 1060 AM. It's also available on the internet. If you go to americamatters.us, you can click and listen to it through Facebook. They broadcast it on Facebook. You don't have to have a Facebook account to get it, but you can listen to it every Friday from 10 to 11 Pacific time.
Nice.
Talk about the market. I interview Ryan will be on this week. Philip Van Dorn from Market Watch will be on the week after. I interview people and talk about current market conditions, global economy, things like that.
Excellent. Well, and I figured, Ken, you'd be a great guy to help us do an election wrap up. You talk about this stuff every week, so let's get into it, huh?
Okay.
Excellent. So, Ken, obviously this week we had the big election, right? And of course, the election went on and on and on. And finally, the election was over. And the polls said, everything was going to be really tight. But they did have the betting markets, and they consistently said that Trump was going to win. And the polls were saying not so much, right? So it turned out the betting markets were right.
Yeah.
And so Trump went to a resounding victory. And they talk about all those things like the blue wall, certain states that are swing states. Well, all those states went for Trump. And so he had over, I think, 312 electoral votes. So it was a really kind of a resounding victory, wasn't it?
Yeah. Yeah. It takes 270 to win. Yeah. That's a big, yeah.
Yeah. So it was a big decisive win. That had to do with it. Biden had stepped out later in the summer, and the campaign didn't have a lot of time to prepare for the Democrats anyway. So either way, Trump. But the key now is what has happened to the country in the last few days and over the weekend. We saw a huge rally in the indexes with everything up 4.5%, 5%. The NASDAQ was up 5.5%.
Yeah.
We saw a small cap rally. And then we saw the banks. They were big winners too, Ken, on lower regulation, belief for JP Morgan, Bank of America, Wells Fargo. Retail earnings were strong. Bitcoin broke new highs on Monday, yesterday with 87,000 per unit. Still, Bitcoin's still a big energy suck, so it's not great for the environment, but Bitcoin is going up, that's for sure.
Mm-hmm.
So what do we make of all that, Ken?
Yeah, it's interesting. We hit records yesterday. The Dow went over 44,000 for the first time. The S&P 500 over 6,000. So it looks like stock market likes the results of the election, basically. So looking forward to the economy, to tax cuts, and Trump will have a better effect on the economy, I think, than Harris would have.
Yeah, I think you're right. I think that's what the signal is there. And now Tesla was up 30% this week as well.
Right.
Elon Musk, put hitched his wagon to President Trump, and he was out of the trail, and that was interesting to see him. But aren't they predicting that Trump is going to get out of the EV subsidies?
Yeah, that was the thing that one forecast I'd see is that EVs wouldn't do as well. But I think with the way Musk backed him, I think Tesla will for sure. Some of the other EV companies are really struggling, Rivian and so forth are struggling, but I think Tesla's solid and will continue to dominate the EV market.
So if they get rid of the subsidies, the other struggling companies will do even worse, but maybe Elon Musk and Tesla will take market share.
Yeah, that would make sense to me.
So maybe I kind of at one point thought, why would Trump get rid of subsidies? It would hurt Musk, but it might actually not help him, or it might help him.
Right.
Yeah. So
dominate. Yeah.
So he would dominate, and it would be a bigger thing. So, and it's still good. still good for General Motors and Ford. They're actually doing a little bit better now these days also.
There's
The other curiosity is we're seeing theaters rebound this week in a big way. A lot of people, maybe we're all sick of the election, Ken, and we all decided to go to the theater.
Yeah. We're getting out to the movies a little more. That's good.
Exactly. So I've got a list of here. I've got a list of the Trump effect election. I'm just going to review that.
Okay.
So appointed the first female chief of staff. And we'll talk about that in a minute.
Okay.
New York City is going to stop giving debt cards to illegals. So they were doing that. They're changing that strategy. U.S. companies announced this past week after the election that they're going to start to bring some production home instead of be in China.
Yeah.
Stock market, as you said, Ken, hits all-time highs. Bitcoin hit all-time highs. The newest migrant caravan coming up through Mexico and Central America is breaking up.
Okay.
So some are thinking that it's not going to go well for them if they come to America now because Trump is going to deport people.
Mm-hmm.
Right. So that's interesting to see that break up. And then Qatar, which was the Middle East nation that was harboring the Hamas leaders, announced they're going to release them and kick them out of Qatar.
Yeah.
So a lot of things like people, maybe they fear President Trump.
Mm-hmm.
Possibly. The Taliban announced they want a new chapter with America, and they're turning their nose at America for a long time.
Right.
China announced they want a peaceful coexistence. Russia is quote unquote ready to speak to the U.S.
Mm-hmm.
Right. The EU decided they want to buy U.S. gas, not Russian gas.
Right.
And the Ukraine leaders are in talks with Trump and Elon Musk, because Elon Musk has Skylink, and that's a big tool in military action.
Mm-hmm.
So Elon's involved in that. So Ken, what does that all look like to you?
Yeah, the geopolitical situation's interesting. I think with the results of the election, it looks like we might be a little stronger in some of our abilities to negotiate with Russia, with Putin, and positions like that, and in the Middle East. Those are definitely concerns looking forward.
Well, and then Ken, you were looking into the tariffs issue too. Trump is talking about tariffs. What do you have on that?
Well, tariffs, one thing just in general terms, basic economic terms, tariffs are a one-time price increase, but they don't really set off inflation, which is a cycle of prices and wages going up. So it's a one-time price increase that affects the import prices. It can be good for U.S. companies, and it's a one-time. I don't think it'll be inflationary as people are saying it would have been, especially before the election. People were saying it'd be inflationary.
So you don't think it would be? And
right. There'll be a one-time price increase just on those foreign ones. It'll be good for some of the U.S. companies too.
Absolutely. Well, good. Now, Ken, you did some work on sectors too, on what sectors you should do well in this new environment with the new leader.
Well, just kind of, gossiping in general, just talking about the tariffs, steel companies for one.
Okay.
Steel, we have several steel manufacturers, oil and gas, banks, defense stocks. I think also small caps in general start doing better too. An asset class, not a sector. But
so Ken, usually when we have a recession and the markets bottom out, then the small caps leave us out of a recession. But we really haven't had a recession. But we had a little bit of a slowdown. But is it almost like, even though the markets are at new high, we're almost like rebooting the market or something, because we were in a slowdown and they managed to keep it from becoming a recession so far, and maybe acceleration in the economy, so it'll be like a small cap effect, like we're coming out of a recession.
Yeah,
maybe that's it.
That makes sense.
Okay.
The market you mentioned, we mentioned the record levels. We're high valuations at this point, but the market's a forward-looking mechanism too. So there's reasons for that.
Sure. Well, what about healthcare, Ken? What do you think?
That might be one of the sectors that goes down a little bit. Healthcare, renewables, uh, EVs, I think, except for Tesla. So yeah, I think the healthcare might be one of those areas that can drop.
Okay. So, okay, well, great. So, sectors obviously are really important, and 80% of the moves of any individual stock are based on their sector.
Right.
Sectors move, then you can usually join along with names in that sector or buy the sector ETF, right?
Mm-hmm.
So,
The sector ETFs are a good way to play it because you're diversified within that sector amongst the companies.
exactly. A good way to play it. Well, good. So then some other big changes coming. The president said he's planning to pay down some debt. I think that's probably the smartest thing that I've heard.
Yeah.
Because we went from the Bush administration, Bush 43, the most recent Bush, about 5 trillion in debt. Now we're at 35 trillion in debt in just
Right.
35 years. So what kind of implications would that have if we paid down the debt?
That would be a good thing because one thing we're seeing as our debt level increases is that the amount we pay on the debt is getting larger and larger. It's a huge amount, especially with higher interest rates, and the U.S. dollar is weakening and not becoming a reserve currency.
Hmm?
The U.S. dollar can weaken, so there's a lot of good reasons to keep that debt down, lower it.
Absolutely. And then now the president, incoming president, talked about reducing taxes as well.
Right.
And so now they did lower taxes during his administration, and then the last administration did not get rid of the tax cuts, and they let the tax cuts go. Right?
Mm-hmm.
They didn't raise taxes, so and they were saying we shouldn't lower taxes, but they had every opportunity to get rid of the tax cuts, and they didn't do anything about it.
Yeah.
So reducing taxes would have what effect on the economy?
That can be good for the economy because people spend more. They have more money to spend and they go out and spend it. So lowering taxes may actually increase revenue because people invest more, spend more. It's positive for the economy overall.
So then if the people are spending more and more, but we've been running these huge deficits, right? So to some extent, the inflation was caused by a lot of the overspending. But Trump, the president's planning to get rid of the deficits, but they're trying to get money into the economy. So the getting rid of the deficit would reduce inflation, but then the spending could add to inflation, but it should be a net suppression of inflation, probably.
Mm-hmm.
And then they talked about getting rid of taxes on tips and,
Right.
and also on certain parts of retirement income.
Yeah. Mentioned Social Security and not taxing tips for people working restaurants and so forth. And it would help them.
It will. Good. Okay. Well, that all could be very positive.
Yeah.
They get rid of the excess spending of debt for the government. That could be a big positive. So I saw an interview with Steve Mnuchin, who was the Treasury Secretary under President Trump last time.
Right.
He talked about tax cuts, and there was a whole discussion during the campaigns about how tax cuts would be for the wealthy, and then that's going to add to our deficit. But Steve Mnuchin pointed out that when done properly, tax cuts can get more revenues, and actually, that's backed up by the fact that that's how it happened under Ronald Reagan in the early '80s. So they lowered taxes, so they got less revenue in from the tax money, but they got more activity, so they ended up getting more tax money anyway.
Mm-hmm.
Right? So that could be a big positive, Ken, right?
Yeah.
Yeah. So then the other big proposal that the president had made and he's going to implement is, he said on day one, he calls it drill, baby, drill. And
Right.
only the way that Trump can say it, right? So he gets up there,
Yeah.
full excitement. So energy independence, and that he means drill, baby, drill on federal lands, right?
Yeah.
Okay. Because we are still actually energy independent.
Yes.
But our cost structure has gone higher because it's private land rather than federal land.
Mm-hmm.
So if they do drill, they're talking about drilling on federal lands and it's, federal waters as well.
Yeah.
So now, Ken, what about natural gas?
Yeah,
How-
we have natural gas supplies that last literally hundreds of years, and natural gas can be a good export product. Liquid natural gas, the LNG, can be exported. We have plenty of it, and it's a relatively clean burning as we transition into cleaner fuels or renewables. Natural gas is a clean burning fuel. So
In fact, I agree with you, Ken. And one of the things that people don't realize is that electricity, most electricity is generated by natural gas.
right,
So if people want electric power and they want electric vehicles, they actually need to have fossil fuels to create that.
right,
So
and the artificial intelligence too is going to create a big demand on electricity.
it will. It
Yeah.
will.
Data centers, right?
So we're the largest holder of natural gas in the world. And then when
Yeah.
we overseas, it's in liquid form, liquid natural gas, right?
Yeah,
So very interesting. Okay. And then the president is talking about doing more trade, less immigration. And clearly the immigration markets have been really kind of a mess. And we've had a lot increased crime because of it. And so if he closes the border, like the president says, then we'll have probably less crime, less illegal migrants, and they'll also be deporting people, right?
yeah,
So that probably can only help the economy get better because we'll have less distortion with crime. So now, Ken, the other thing they're talking about is Iran has been easy and free to operate in the oil markets
right.
for the last couple of years, and that wasn't that way under Trump. So Trump is planning to put the screws to Iran on oil, and that'll change the oil markets. And what do you think of that?
Yeah, I think that's probably a good policy. Just situation in the Middle East, countries like Iran, putting some control under them is a good policy.
Yeah. Well, and then Trump had talked about adding sanctions to Russia more so than they have now, and
Right.
will try to settle the Ukraine war right away. And won't that release the breadbasket of the grain markets in the Ukraine as well?
Yeah, it would. Yeah, that would help with the grain there, and that would be a good one to get solved too. That's a real concern. I think Trump would be in a good position to speak with Putin. They tend to get along pretty well, and speak with him and work on a settlement there.
Yeah. So maybe they'll have to give up some land in Ukraine and all that, but
Right.
then but then that'll help the markets and that'll help the economy. That'll help everything. The less wars, the better, right?
Yeah, definitely.
Yeah. So it looks like the U.S. Senate is going to flip to Republican hands, and looks like the House will probably also stay in Republican hands by only a few seats.
Right.
So be able to get some things done on getting the economy better. Most of the voters cited that they wanted Trump to be elected because of the economy, and the economic record of the Biden administration was not very strong.
Yeah.
But still need 60 votes to get things through the Senate, though, right, Ken?
Right.
So they can't just kind of go off and do crazy things. They still have to cooperate with the other party.
Yeah.
So now, there was rumors that Trump was going to ask our Fed president, Jerome Powell, to step down, but he's not going to resign, is he?
No, he's not. So he's not going to. He's going to stick with it.
And he can for how long is this term, Ken? Do you know?
I think it ends next year.
Okay.
I don't remember what month. I'd have to look that up. Yeah. It'll be 2025.
So he's going to hang around.
Yeah.
Now, the Fed had said earlier this year, and they'd said for a while that they're not going to lower rates until the inflation rate gets below 2%.
Right.
So then sometime around the summer, they started changing their tune a little bit and saying, well, we're about 2.7, 2.8, but we see a trajectory down below 2. So we might make a move here in August or September. So they did make a 50 basis point move downward. And then just Wednesday of last week, the day after the election, they made another quarter of a point move. Now we're at 4.5 to 4.75 range on the Fed funds rate, which is the only rate that they control. And so they lowered rates. But now I've seen some presentations with Chairman Powell saying that they may see inflation start to tick up again because of some of the policies of the new administration. And so if that were the case, they might have to raise rates. Ken, what do you think of that?
That's a possibility. It might be a good time to be careful with long-term treasuries, stay in TIPS, treasury inflation protected bonds or real short-term bonds. Because there's definitely a possibility they could go back to raising rates.
So we raise rates, then when the rates go up, bond prices go down. So we could have another terrible bond market like we had in 2022.
It's possible.
So in that case, we should be careful about the 30-year bonds and the longer term bonds.
Yeah.
So, okay. Very good. All right. So now the net of all this is the economy should be better than what we've been. And I think that's what the voters were looking for.
Yeah. I
And
think the voters got real frustrated with COVID and the inflationary impact of some of the COVID relief, things like that, inflation especially. Yeah.
so the economy should work well. But now we see the market hitting new highs. And we just did the math on it, Ken. The market is trading at 22 times earnings, expected earnings. And that's on a 270 number of the S&P earnings. Of the S&P just over 6,000, like 6,008. So that's a pretty high multiple. And the highest multiple ever on forward earnings was in 1999 at 23 times. So maybe we're ahead of our skis a little bit here. What do you think?
Yeah, we are at high valuations. It's
Right.
a good time to be a little cautious.
So, if the economy gets better, then maybe we'll see an increase in the earnings expectations from 270 to 300 on the S&P, so that we get back to 19 or 20 times earnings. So fair value on the markets is about 17 times earnings. I think the lowest multiple in history was 7 times in 1974. And then the highest multiple was 23 times in 1999. So we're in the high end.
Yeah.
So let's see if they're going to raise earnings estimates over the next quarter or next month or so. And maybe our valuation won't be as high.
Yeah. That would be good.
So, okay. Well, I think that's it. I think that's an interesting wrap up here. We went through all the issues of the Trump effect. So we're not really cheap here in the market, but the economy will get better. And could we see maybe the market go a little bit sideways, maybe sell off a little bit and then rally, but kind of end up in the same place as a year ago, possibly? Is that even a possibility?
I think so.
Yeah.
I think that's a pretty good possibility.
Yeah. So even though the economy will be better, the market's been anticipating that. And certainly with the big spike in the market last week, so maybe folks could be a little bit more cautious than they might be at lower multiples, and the markets are really, really cheap. So that's our take on it. Ken, anything else you want to share with everybody today?
I think that you covered it pretty well, Brian. That's a lot of good information there.
Excellent. All right. Well, thank you, Ken. We're proud to have you with us today. Ken Roberts, who is the host of Ken's Bulls and Bears in Reno. So be sure to check out his show, as he mentioned, on American Media Matters, and of course, also on Facebook. So Ken's Bulls and Bears. Thanks for being with us today, Ken.
Thank you, Brian. I enjoyed it.
All right. And thanks, everybody, for joining us for this post-election wrap-up. So our bottom line is we think the economy is going to probably get better. Markets are not cheap, but we'll see how it goes. Maybe the earnings will get better, and the earnings will make the market a little bit less expensive than where we are right now. But we'll be back again, and I think Ken will join us again in the future. But I think Chris Reardon will be back to join us here soon as well, my regular co-host. But thanks, everybody, for being with us on the Today's Market Explained for a post-election wrap-up. Thanks again, everybody. Bye-bye now.